off. This is going to be session will be roughly an hour. If we have time at the end, we'll have some Q&A throughout the session. I'll be asking a few questions to the crowd, trying to keep everyone engaged as much as possible this early in the morning. So feel free to jump in whenever I'm asking questions. But other than that, please keep your mics muted because I do hear a lot of background noise already. So like I said earlier, this is a session that's going cross borders. We're going down into Australia, down under, to talk about raising investment in the UK, EU, and Australia. Hayden and I have worked with our founders, for the last, I've been here for a little over a year, and my main mission has been trying to help founders raise investment. So hopefully that's been working for some of you, or let's try and keep it going and try and, build out your networks. And I hope you guys get some value from this session. So starting off, so raising capital. There are basically 3 key avenues to launch. This is where we're going to start making things, interactive with the crowd. So what are 3 key avenues? What are 3 main ways to launch and raise capital for your startup? Anybody can jump in. What do you got? Raise a hand, maybe. I'll call on you. Quite quiet so far. What do we got? Aaron, Leo, what do we got?
Self-funding.
Self-funding. That is bootstrapping. There we go. Now, what else we have? Stuart,
friends and family is normally a pretty good one to start with, and unknown colleagues.
Friends and family, right there. And what is the third one?
Stealing?
Angel investments. Angel
investments and VC. So sophisticated external investors. Now, so there's advantages and disadvantages to all of these. Bootstrapping, obviously, you're going to be able to retain your equity, also retain full control. At that early stage, your valuation is going to be at its lowest point. So raising any capital at that stage is going to have a significant dilution on yourself. In the UK, the average founder only has 13% equity at the time of exit. So the name of the game is often bootstrapping. What can you do to continue to move your product to market without giving up your equity? Friends and family, I think the main thing, and I talked about earlier, is my main motto here at Hyper is always be raising. You're always looking for investment. So anywhere you're going, you're chatting to someone, hey, I'm launching my startup. I'm looking to raise 250K. Can you please give me 30K? Anytime you're out talking to friends and family, if they don't invest, maybe someone else can invest. So you're always pitching. Also in the UK, you have the advantages of SEIS. So anybody can really be an investor. You're telling them, you're only really risking 25% of your capital whenever you make an investment in the UK. The other story I'll tell about this is whenever I was whenever I was going through my startup and working with a lot of the Hyper founders, there's always this hesitancy to ask friends and family for investment. And I totally get that. I had the same feeling whenever I was doing mine. I think the mindset shift that you can have is whenever you do feel this supreme confidence in your startup and that you're going to be able to succeed out there, you should be willing to pitch to your friends and family because, imagine your best friend launches a startup, doesn't ask you for investment ever. 5 years from now, it ends up exiting for $1 billion. I think you end up being pretty frustrated that he didn't actually ask you to invest. So if you feel this level of confidence, then you should bring others along for the ride. And then external investors. Obviously, this is the most challenging, and we're going to focus a bit on this today and how you can try to engage with them. They're investing, primarily, let's say, angel investors you can get. Let's say pre-product. VC firms are much more difficult to get pre-product, pre-revenue. They will do it, but they're going to be so hard hitting on valuation that oftentimes it's better to try and find from angels and friends and family to at least get your product to market and get some revenue in the door. Okay. All right, so some fundraising fundraising work streams. I have 4 here, but what do we have for some ideas on some work streams to get some investment in the door?
Can you classify a work stream? Because I don't think it's a term that we might be used to.
So, like, what would be how would you go about trying to get a check into your startup, into the bank?
Well, I've done 4 VC meetings and 3 private equity this week, and I'm knackered. But what I've done is,
how did you get those meetings?
it was all cold outreach. Essentially, first what I had is a high-level explainer deck, which addresses the problem that the business solves, and then goes through the approach and why it's unique and why it's going to work and why it may work better than the incumbents, if there are any that are in the addressable market. And then you look at the usual things of the TAM.
Yeah, so I'm talking about just the initial thing. So basically, the cold outreach that you mentioned there, cold outreach is one of these. What is another one?
Yeah.
Networking. Just get out there and network it. Tell people.
Yeah, networking events. That's huge. Aaron?
Yes, so I was just going to cover off, getting out and seeing customers, a bit of validation involved in that, and seeing if you can get someone interested enough to invest.
Yeah, agreed. You definitely need to get validation in order to get out there to secure the investment, give them some security in there in believing in you. You need to have validation and traction. Ellie?
Yeah.
Use an accelerator company.
Use an accelerator company. That's another one. How about warm intros? That's another one.
Yeah. Lots of referrals if you can get them.
Yeah, that's one of the most, like, let's say that's one of the easier ways to get it, and I'll discuss a little bit further in a second about how to get those warm intros. And then the 4th one's kind of tricky, but it's just something that you really need to think about, and that's going to be online presence and brand equity. So, like, it's pretty much the very first thing that you need to focus on when you are raising investment. So, like, the first thing you're going to do, or the first thing that's going to happen whenever you reach out to a potential investor, is they're going to go to your LinkedIn, they're going to go to the landing page, and they need to see that this is a real company. They're not going to invest in something just, without having at least that level of online presence and brand equity. So landing page is really kind of a non-starter with anybody that's going to write any kind of a check, in my opinion. And then to speak to online presence a bit, like, one of the ways you can start getting some inbound from investors is kind of building a bit in public. So talking about, I've launched my fundraising round. I can speak to one of our founders 2 weeks ago. She posted onto LinkedIn, I'm launching my pre-seed round, explained a bit more about her business, got a few investors writing her into her DMs. Her and I sat down, met with the investor, and closed her first, or I guess it was her second check. And now she's beginning her build. Networking events, I think that was Stu that brought that up earlier, that this is really important. I think getting out there, seeing investors, meeting other people in the community, it goes a long way. A lot of people in startups do want to help each other. So it's important to get out there and be seen. Warm intros, as I discussed. One of the ways, there's a lot of different ways to get warm intros. I think, again, it's about trying to build out your network in the networking events. Also, one thing you can do is look at, let's say, angel investors and see the companies that they've invested in. A lot of times they'll list these on their LinkedIn. VCs do this as well if you're at this point. And then reach out to maybe their portfolio founders, ask how things are going, and explain a little bit more about them, about yourself, and then ask for a warm intro. It's like any kind of way that you can get in there beyond what would be cold outreach, which is statistically the most challenging way of doing this. I think, what was it, Jay, my colleague yesterday, said that it's like an 8% hit rate on cold outreach to get a meeting. Even I think that might even be quite ambitious. Cold outreach is very difficult. However, VCs it is their job to write checks. It's their job to take meetings, and it's their job to have some inbound funnel for startups. So they do it. It's just a matter of making sure that you're telling the right story. Now,
just ask a quick question, if I may.
Yeah, go ahead.
So if you go back to the previous slide, you talk about brand equity and landing page. So you're building your website. You've got the best idea in the world. You don't want anyone to steal the idea, but you want to give them just enough to hook them to say, yeah, I want that conversation. It'd be really cool if there's some good examples of what a good one looks like versus what a terrible one looks like, if you've seen those. Because I, for one, I'm sitting there starting to build a bit of that landing page, that social media stuff. It's really hard to strike the balance about not sharing the sort of real intellectual property of your idea, but get it hooked.
Yeah. Well, first of all, I think that you shouldn't be worried about people stealing your idea whenever you're launching out and whenever you're this far along. You should be betting that you're the one to build this. So I think if you're trying to not tell enough and still get a meeting, that's just not going to work. You have to be able to go out there and tell what your value proposition is cleanly. I think that's the biggest problem from a good landing page to a bad landing page is I'm reading a bad landing page and I have no idea what the hell I do. So make sure that it's clear as day that a 12-year-old can understand what it is you do and how you do it. And that's going to be the hook.
Cool.
I can talk to you about some examples, but I would say just, go out there and just go through landing.
No, you've answered my question, and you gave me a good demonstration when we were in Hyper's office the other day. So that's cool. Thank you.
Cool. Okay. How to get the right investors for you. So I think a really important part of this is having the right investors specifically for you and your startup. The right investor can open doors to other investors. It can open doors to partners. It can open doors to customers. So trying to find people that are strategically aligned. So for example, could be if you're launching a sports brand, it's an athlete, for example. That would be a good one, a former athlete. It's finding people that are in this same kind of area, and hopefully they can help you get to market in a better way. If you're also going along the lines of, let's say, more sophisticated investors, one thing I would do is try to find investors that are in the same, they invest in your life cycle of a business. So let's say you guys are probably all pre-seed at this stage. So you're trying to find pre-seed and specifically investors, and then go one further and try to find the right industry as well. So research and target, stay organized, write compelling copy, run the outreach, pitch and follow-ups. We'll go through these now. Research and target. So one of the ways you can research and target is going through databases. There's some like ShipShape. What's the other one that we talked about?
Folk VC.
Folk VC. They have another database that you can go through. I would say also you can just go Google and LinkedIn. So here you go, SEIS dedicated funds. This is specific to the UK, of course. There's all these different resources that are going to list out SEIS dedicated funds. For example, then we go here, SEIS investment funds, most active. Let's see, Balderton Capital. Then we see our team. So we're trying to find the right investors for us. So number 2, stay organized. I would say there's a few different ways of staying organized, but this is imperative to do at an early stage. One of the documents that we share over early on in the Hyper process is this commercial worksheet. It's going to have an investor list here, and it's going to allow you to keep all of your potential investors in a line, and you can also track as you're speaking to them as well. Also, there's Notion templates or actual CRMs that you can use. Something like HubSpot is another potential that you can use to keep organized. Third is writing compelling copy. This is probably the most challenging thing you can do in your cold outreach. What you're trying to do is give them just enough that gets the meeting. You don't need to explain everything you do in your business from the initial outreach. They're going to, turn that away. I think huge signal to the investors that you're going to have the ability to fundraise. So this needs to be written exceptionally well, or else they're automatically going to write you off that this guy can't fundraise. The number one signal and the number one reason investors will invest in a founder is the signal that they can continue to fundraise. That is, I think that's the number one thing. So you have to have the ability to signal that I'm going to be able to bring checks in the door. I can sell. So writing compelling copy is super important to that. Hard thing here is over-explaining. This is probably the biggest thing I see founders do. You're trying to strike this balance of telling enough and telling too much. This is my favorite quote, and a lot of you that have been here and work with me have heard me say it probably 10 times already. I didn't have time to write a short letter, so I wrote a long one instead. It's my Mark Twain. It's much more challenging to write short, concise copy than it is to go out there and brain dump and write something that the investor or reader is just going to tune out because they have reader fatigue. So I'm going to give you.
What would you classify as short copy versus something that gives them enough as a taster?
That's going to be the next slide here. Actually, I'm going to show you an example going through this kind of hit list of an introduction, personalization, value proposition, highlight the team, and then a call to action. So we have an email outreach example. What we're trying to do here is personalize off the bat, but we want to give at least a little bit of an overview into what you do early on. That way it kind of hooks them in and makes them interested. So my name is Bill Amos. I'm the CEO and co-founder. And for example, here, what I've done is I've gone to that Balderton Capital team. I found an investor that invests specifically in InsurTech. In this example, I am a CEO and co-founder of an InsurTech business. So I'm using that in this here. So we provide a simple platform for businesses to get customized, adaptable insurance coverage. So he understands that we're in the same lane. I saw your recent investments in Lassie and Zego. I found that by going into Balderton Capital's team and seeing what they've invested in. So they'll list these things out. Let's see, our team. Where's Mr. Rob Moffat? Here. He's on Lassie. He's on Zego. So I can research these. Series A, where there was a Series B, find it out. Series B in 2023. So we go back here. I saw your recent investments in Lassie and Zego. Congratulations on the recent Series B, and thought Safe Harbor would be a great fit for Balderton Capital. Then I'm going into traction and highlights. So this is giving that value proposition and telling, trying to get a little bit of FOMO from them. We have 22 letters of intent from UK and US businesses. We have a prototype built. Our CTO is an exited founding team of a health tech startup. And we have a former Lloyd's managing director as advisor and first board member. So all this is just meant to try and engage them, get them excited about things. We are raising our pre-seed round. Still some SCIS allocation left, so you're trying to share. We've already raised some in order to finalize the development of our MVP and launch our product in the UK. So I think one of the main things you want to do here is highlight the team as well. So one thing I will say is another amazing signal. I talked about the ability to raise, but that still comes back to the fact of ability to sell. You're selling. At all times, a founder is selling. They're selling their business to potential customers. They're selling their idea to investors, and they're selling their vision to early employees and advisors. So you're always selling. So highlighting at least a strong team early on before you have product shows that you're able to sell that vision to your early customers, and that goes to advisors as well. So bringing on. Some people say I did my webinar with Anthony Rose of Seed Legals a few months ago. He said he's not bothered by advisors. Whenever I look at a deck, that's almost one of the very first things I look at is the advisors, because for me, it shows me that they've been able to sell that vision to people. And then a call to action. I think a soft call to action is probably best at this stage. So it's just like, would you be interested to learn more about us? So it's just real nice, easy. It could be, I'd love to get your feedback on what we're building. So it's not, give us money right now. It's about trying to build this relationship early on, because this is only the very first letter you're going to be sending. And this is an example of email outreach to a potential VC or angel. But we'll go through later about email outreach to a potential friends and family, which might be more applicable to your guys' stage right now. Run the outreach. First of all, you need to warm up the email. So your email, if you just immediately start sending lots of outreach, it's going to end up in spam. So one thing you need to do is warm it up. You warm it up sending emails to your friends and family. In that email, hey, please reply to this, and then send a few email interchanges to show that emails are coming in and going out of this email, or you're going to automatically be flagged and end up, and your domain is going to be cooked. You're going to end up in spam for good. You can run this via direct mail or email outreach tools like Apollo.io. Apollo.io allows you to create, cadences where you're reaching out to investors or potential customers through their cadence, and it's like setting up like email, LinkedIn touch, and so it kind of just guides it for you. Or you can just run it via direct mail. Do not send your first emails to your best leads. Really important. I made the mistake of doing that and realized that you might see a typo, you might see some type of little thing that you want to change. So burn a few that aren't necessarily your ideal investor profiles early on. And then 4, stay organized. I've said this multiple times through here. That's one of the key things. You don't want to send the same email to somebody twice. Track and follow up. It's going back into that investor demonstration doc, or the commercial doc. And then from in there, you have the first email, add LinkedIn, second email. So you can just keep everything organized in there. Going to kick it over to my colleague, Hayden, who's going to discuss a little bit more about the investor lists and also investor relations.
Thanks, Bill. So guys, what Bill's mentioned, I'd say is only 30% of the job. I'm going to share something with you in a little while. We're going to send over a little bit of an information pack post this call, and it's going to include 55 different VCs that welcome cold pitches. So we'll send that over. There'll be a link in there. You can go and basically submit a cold pitch, drop your pitch into an online portal, and the VCs will then be able to view it from there. So that's nice. We've compiled this list for you. Yippee doo dah day. Everyone in the world can source these lists and has access to these lists, right? So building out a list or having a contact or having someone that you can send an email to, that is the easy part. The hardest part, and like Bill mentioned earlier, is warming up the lead. And I think it was it you mentioned you had a couple of pitches this week. Is that correct?
Yeah, I had six this week.
Brilliant. So if you wouldn't mind giving us some context as to the time frame between you meeting these people or obtaining their email, whether or not they were from mutual connections or however they came about, and the time between obtaining their contact details to then actually having a pitch. Would you mind giving some context to that? Ellie, I see you've raised your hand. It'll be great to get your insights into this as well. But Stu, please go ahead and just share a little bit more details about that.
Yes, certainly. Happy to. So I would say it's all about striking whilst the iron's hot. I wrote a VC and PE list of 500, which was a research phase that I started off with. And there was quite a lot of segmentation that went on within those. So that was different profiles of buyers, location, what series they like to invest in. So I was kind of doing that by design. The numbers that you said at the start were actually pretty much on point, because I'm getting about, across that 500, about a 7% conversion rate to meeting. Apart from where I've done LinkedIn campaigns within private equity in my own location, which is Sydney, by the way, and the conversion rate for that is 20%. I don't know if that's a differential to the norm, but it's interesting. So from the point of starting the campaign locally, I would say that it was a 24 to 48 hour response rate from the private equity and VCs, and within 4 to 5 business days I was presenting to them.
Brilliant, thanks, Stu. And how was the response from them? Has anyone shown interest or willing to write checks, or what have they said were the next steps?
Yeah, look, unfortunately, I think that because we're pre-revenue at the moment, the VC responses that we got were standardized in terms of they were actually very forthcoming in that they thought the idea was wow, which was great. But then every single time I've had a but, we want to see it gaining revenue and traction and in market to varying extents before we'll invest. So because we're pre-revenue, none of the VCs were interested, but 3 out of the 6 of them have said, come back to us when you're at XYZ stage.
Nice.
The private equity and angel investors, if you're pre-revenue, are much hotter, in my opinion, in terms of their appetite to invest and their willingness to take a punt at those lower those seed levels. So I'm hoping to get some follow up. I'm on second meetings with several of them next week.
Nice, Stu. That's brilliant. Yeah, I think I agree with a lot of your comments. So it seems, and we see this often. The hard work begins now. It's not landing the pitch, but the subsequent months that follow in terms of trying to maintain momentum, keep them up to date. And this is now the second part of this webinar is what I call investor relations. So, Stu, you've done obviously incredibly well. Landed 7 pitches this week. Maybe none of them even convert. So you had an 8% conversion rate from cold outreach. Then you've had 8 actual meetings, of which none of them have yet to convert into actual cash. So the hard work begins now, and this is what I would call investor relations. Just while we're on the slide, if you were reading it, essentially the point of this slide is trying to warm up the lead. And if you, let's say, for example, you meet someone at a networking event, you send them an email, let's say they don't reply. Often they're maybe mid-reply to the email, then they get called away. They don't end up responding. So you want to just prompt them again, hey, just a reminder, please do follow up on my mail. And again, if they don't respond, send a request on LinkedIn. I must say, you'll probably never get any accepts on a LinkedIn request to a VC investor or a partner. So rather just give them a follow. Maybe you get lucky and they do accept your connection request. If you don't, and you noticed after about 2 weeks' time that they actually haven't accepted, then go and just withdraw the LinkedIn request, because that may just give you another shot at it a little bit further down the line. Similar approach to VC investors, but more of an email approach. And then if, for example, you haven't heard anything back, I mean, you can assume you're either in the spam folder or they are reading your emails, but they're not giving you much thought, in which case you can try and convert them into this investor update email. So we've got a list. We'll send over a pack after the call, but these are the top 10 most active UK VC investors. I've left the individual responsible and the position in the company open for you to source these, because the way in which you may meet any one of these individuals at the company may be different. So you might have contact with the partner. However, I've personally been in contact with the investment team. So that my list would be individual responsible investment team, but your list may be different. Ellie, sorry, I know you had your hand raised. Did you have a question? Do you want to just jump back there or a point? All good? Okay. So what I recommend, top 10 most active VCs in the UK. So follow these individuals. You can send connection requests. However, I do think they're going to be bounced. So rather just give them a follow, and then also go into the VC, the company itself, because they obviously have a LinkedIn page. follow the VC page, you'll see that they often post their own investor update events. They may also be presenting a new portfolio of companies that they're investing in which case they'll have a few of their founders come and pitch. So we went to one at Velocity Capital last week and ended up eating Chinese in Soho at 3 a.m. in the morning. So it was a way in which I could meet some of the founders. So they had 3 founders pitch there. The next time, if I was a founder myself, I would say, hey, Ronald, he's one of the founders of a company called Scene, in which Velocity Capital is invested in. The best way to do is I've built a rapport with him. I would then ask Ronald, would you mind introducing me to the managing partner at Velocity Capital? And that way there's a warm intro. So that just goes back to one of the tips Bill recommended earlier. So I've put a little link at the bottom here, Luma Discover. So this is a great source for you guys to go in London, have a look and see what events are available. Some very useful ones. So following the VC page themselves, and then also looking at Luma, you might bump into very influential people in the VC space, given a few of the events that are linked up there, which is quite nice. So a few of these welcome cold pitches as well. Obviously, that's the least effective, and you'll struggle. So you want to be really relying on those warm intros as opposed to trying to pitch through their website. This is a list of further list of about 55 different VCs. Link to submission. You can go and submit your pitch deck there. Again, not something that we recommend, and again, like Stu mentioned, very, very low conversion rate. So a monthly progress recap. We've built this template for you guys. What I would say is that those are interested in being investors, you would update them quarterly, versus this one is those that are investors, in which case you would update them more monthly. This is obviously quite a detailed, very detailed kind of progress report, and you'll see there's an email template show which you can use and recap. And it also goes into a post-launch recap and some of the metrics that I think are key when it comes to alerting or updating your investors. We also have a friends and family email template. So a lot of you are pre-seed and invest, especially in the UK under SEIS. This is something that we'll send over and you can use to essentially try garner a bit of investment from some friends and family and alert them to the tax implications. I mean, a lot of the founders themselves don't understand or know the tax implications. So trying to essentially educate your uncle or a friend as to these, you can send this email, and that's a nice and easy way to upskill them as well and get them keen into investing, given that nice tax incentive. This is the 3 Ps method: progress, plan, and problems. A very simple prompt for you for your monthly emails for people who have invested already. I guess they just want to see, cool, how are you doing? Are you using my money in an effective manner? And a nice, short, simple way to do that is with the 3 Ps, as opposed to the previous email template that I shared on the slides 2 slides ago. So this is an example of an email. This is some of our founders that came through the Accelerate program, founders Cynthia and Imogen. So their business idea is relationship advice for men by women. So a very, very niche business idea. And they call the ladies who give this advice amigas. And the biggest risks that we'd obviously prompted them and that they'd thought about and that we challenged them on is, do men actually want dating and relationship advice from real women, and will they pay for it? So these are the white hot risks, as you call it, that they were trying to test and validate. Interestingly, they'd included me in their email CRM system, and knowingly that I'm not personally the biggest angel investor at Hyper, or personally an angel investor that has access to massive amounts of cash. However, they, just in terms of the psychology of including me personally and and I'm sure that their network expands vast and wide. They've got, well, it is a bit of a spray and pray. However, for example, knowing that I have access to this email, I then share it with Bill. I then share it with our founder and with the angel investors that we're often interacting with. They're kind of building an undercurrent of a buzz without being in your face, without even having access to the people who maybe have that type of access to capital. So I don't think and maybe Bill might have an opinion on this, but I don't think it's a bad thing to include everyone and anyone who's interested in following your progress as an update for Amigas, be it customers, given that they could be, your biggest voice in the market as well. And often anyone, well, even a customer may have access to an angel network. So this was obviously very early stage, and there's a more detailed report. But so the updates are then limited. Let's just jump to the next call. The next slide. What's next for Amigas? They'll be testing quality, unit economics, and core value propositions. And then the next to 12 months, essentially, they've included an ask in here. To fuel the next stage of our journey, we're raising £150,000 of equity. Again, at this stage, and Stu, you might be at a similar stage in terms of trying to test and validate some of your biggest risks. Asking for money at this stage is difficult. And again, like you said, for PE firms, the risk appetite at a company at this stage it's tough to write a check. But what you will find is if you have all those PE investors that you managed to chat with this last week, and you've garnered their details, and you start sending emails like this, and they see you go from strength to strength. They'll be chatting about you in the office. They'll be discussing Stu and his business and the progress that he's made. They'll be saying, "Wow, he's a man that can execute." And essentially every time they may or may not be involved in the ask. However, the ask can relate to different things. It can relate to money. It can relate to introductions. So just keeping your ear on the ground as to how people may help, but also alerting them to the fact that you're basically able to deliver on what you promised you were going to deliver, even though they may not have a monetary impact or monetary involvement at this stage. So there's an ask at the bottom here. And again, here we go. If you know any early stage angel investors who could be interested in hearing about our ambitious global vision, feel free to share this report. So very early stage company and a minor ask at the end. Another company, these guys are called Step Mixer. So what you'll notice, these guys are a little bit later stage. They are revenue generating. I think they're raising a seed round. But you'll see here, this was a picture of their, I guess, a branding picture that's been removed. So apologies for that. But what you'll see is metrics, clear and very concise metrics. They've had an increase in 203% artists, which I think is the supply side of their marketplace. They've had an increase in sales. They've got fan sales, so nice and easy. And you'll see some of the highlights. They've got a new agreement. So again, I may not personally be an investor. However, you've been over the last couple of months, Stu, hypothetically, you've got now 8 warm leads that you've already pitched to. And at the end of the call, I hope that you've asked them and said, can I tentatively add you to our investor updates email? In which case, every month or every quarter, you'll be sending these sorts of things to them and basically getting them excited. So, I mean, it's incredible that you've had the pitch. The answer may be a no, but like you mentioned, it's a no for now. So I think the rest, the real hard work comes in after actually having an original pitch and keeping the relationship warm, keeping them up to date and excited about what you're doing and showing them that you've been able to execute on what you promised.
I think that's a great point, and something I just add to that is one of the things that I like that brings to the table is that you can be a visionary. You can be someone that is good at looking at a problem and being the creative that can come up with an idea to solve it. But that doesn't mean that you are good at solving execution risk. And I think that if you follow a process like you're suggesting, like this, it makes you look more holistic as a solid investment. That whilst you are an ideas person and that you can innovate and come up with exciting ways to solve problems, you're also the person that can roll their sleeves up and give a continuance of growth and execution.
Exactly, Stu. Thanks. No, that's spot on. It's the with or without you attitude. There's a thought leader in the VC space at the moment, a guy called by the name of Daniel Priestley, who some of you may have come across, and that's his approach. It's the with or without you. I'm going to do this regardless of or not if you're an investor, and essentially that just shows a sign of massive confidence. And as an investor, if you're going to do it well, if you're the entrepreneur, you're going to do it with or without the investor. That for me is a sign for an investor that they're going to want to be going along for the ride. Alrighty, final tips. So the first check is the hardest. So people do not want to look like idiots. If there are people on board, and they are going to be more willing and more likely to jump in. Individuals of VCs on average invest only after 6 or 9 months of contact. So this is just going back to what we've discussed about. It's not the first pitch that you have. It's actually doing the hard work after that and proving that you can decrease the execution risk. The rule of two, it's a concept of if you've met an individual once, that's great. The chances of you meeting them again are low. However, if you've met them organically a second time, this relates not only to relationships, be it romantic or personal, but VC relationships as well, or angel investors. If you met them 2 times organically, and you reach out post the second meeting, I think those individuals are going to be much more likely to respond to you, knowing in their mind that there's a higher chance or likelihood of them bumping into you again. So however you do it, be it by crook or by hook, if you stalk the investor, if you follow the VC's page and you attend the networking events, and you haven't made any requests as of to date, but you've bumped into them at the coffee shop, you've bumped into them at their quarterly investor updates meeting, all of a sudden, if you had to reach out on the third time, you are much more likely to get a response from them, and that's the rule of two. This number 4, raising 1.5 million. So this is a strategy, a FOMO strategy, and it was harnessed by a guy called Kevin Ryan, where he mentioned he would mention to Stu, in your case, the pitch meetings that you've had today, and you mentioned it was you were trying to create this FOMO or striking while the iron is hot, is essentially saying, cool, we're raising a round of 1.5 million, and then potentially reaching out next week, hypothetically, Stu, and saying, we're actually raising, we've gone a little bit more interest, we're actually raising 2 million now. Bearing in mind that you'd always envisioned on raising 2 million. You've had 7 different meetings. Hypothetically, any of the other VCs don't know that you've had those meetings, but they may think, wow, Stu's actually gotten someone who's written a check. Guys, they'll speak to the investment team and say, should we not reconsider this? He's clearly getting traction. He's got buy-in. Going back to the number 1, the first check is the hardest. Herd mentality is key. You've even though it may not be the actual true case, but you've flipped the switch in the investor's mind to say, oh wow, there are other people involved. Maybe we've missed an opportunity. You might get a call, Stu, in your first investor email update that comes next week, to say, well, actually, guess what, guys? We're now raising 2 million because we've got a little bit more traction. So that could be a trick you could use, Stu, to maybe have more crack at those investors you pitched out to.
Do they ask you if you've had an increase in the cap table before they'll move forward on that conversation?
An increase? No, I don't think so. I mean, what I would suggest is you say, well, our valuation's the same, but we're going to be oversubscribed, and I, as the entrepreneur, am willing to give away a little bit more equity, given the class and quality of the investors that have shown interest. That would be one way I would get around that.
Okay, thank you.
So going on to number 5, what is the easiest way to raise VC funding? And this is a hypothetical question. The easiest way to raise VC funding is to have an angel syndicate invested in your startup. What's the easiest way to have an angel syndicate invest in your startup? That's to have an angel invested in your startup. What's the easiest way to have an angel invested in your startup? That's for you to have already raised from friends and family. And what's the easiest way for you to raise from friends and family? That's for you to have already committed a whole lot of your own capital into the business, and friends and family know that you're serious about this thing and making it a success. Any questions on those slides? Yeah. Okay. So, Ellie, do you have a question, or is it Zach?
Got a question. So, in regards to raising funds from family and friends, how do you work out in terms of like what value? Because you've mentioned with bootstrapping, you want to obviously keep as much shares as possible in regards to that you're not going to other routes which might accumulate more equity. How do you do the equity distribution when it comes to raising funds with family and friends? How do you determine value for their money in your venture?
Yeah, it's a great question, Zach. And there's obviously various ways in which you can raise using an ASA, the Advanced Subscription Agreement. But again, that's VC speak talk, and it's not something that friends and family necessarily can resonate with. So what Bill and I suggest is raising at a hard valuation of £1 million. That's obviously up for negotiation with your friends and family, but giving them a firm percentage in terms of what money they give you is you're going to give them a specific percentage back. Having that firmness with them or mutual agreement as to what the valuation is helpful. And obviously, friends and family are a lot more generous, so they're not going to negotiate hard with you. They're not going to try run you down and try bring you back down to a 600K valuation or 700K. So £1 million is a nice one. It obviously shows that they're willing to help and be generous in your valuation, and then it also doesn't take away your equity. But there are obviously ways you can raise under an ASA where the valuation gets pegged further down the line once you have what they call a lead investor. But again, that makes it a little bit more tricky because you want to also treat your friends and family well and make sure that they know what they're getting and just be transparent about it. Otherwise, they're just giving you cash and saying, okay, cool, I'll let you know what you own in a couple of months, which may or may not ever come to fruition.
You also can look at things like the Burkus method. Ultimately, your valuation is a negotiation. Like Hayden said, your friends and family are not likely to negotiate heavily, but you can pull out the Burkus method to say this is kind of the standard industry practice, and then be able to speak confidently to each of those elements of the Burkus method and why you've come up with the valuation that you have. Other questions?
Cool. So guys, this is an event on Friday. So Eva is one of the cold outreach, one of the cold outreach masters in the industry. So please do join for that. You'll definitely pick up a whole lot more tips from her fundraising playbooks that she's mentioned. So that's at 12 o'clock on Friday. So please do join. That's it. That's all from my side. Bill, any last comments from you?
No, thank you guys for joining. We're going to follow up with some collateral. So as Hayden went through his databases of investors, some example templates, we'll also send a recording to this and probably try and send over the actual slides as well. Thank you all for joining. We're going to try and start doing this at least once a month from either the UK or Australia side. So trying to keep this much more collaborative and keep everyone, give as much knowledge as we can to everyone. So thank you all for joining. Looking forward to chatting with you guys in our next sessions.
See you guys. See you Friday.
That was brilliant.
Bye.
Thank you very much. That's really good.
Thank you.
Bye.